in Australia and Europe. Our next speaker works in that group, and he's the head of product strategy for modernizing the Hogan platform into all the things that you just heard about. So please welcome Scott Lorenz, my dear friend and friend of iValley.
My exes live in Texas. And Texas is
I wonder what music you're going to play.
I didn't love to be, but
All right. Hey, good morning, everybody. So who here, don't be shy, works for a bank or has worked for a bank? Anybody? Okay. All right, so we're going to talk about banking. I'll start off, let me tell you a little bit about who I am. As Patty mentioned, I'm responsible for our core banking products at Celerity FinTech. We'll talk about what Celerity FinTech is, what we do. As he mentioned, so Celerity FinTech is our banking brand. We're part of DXC Technologies. DXC is really not a new company, but it's a new name. DXC was formed last year, the merger of Computer Sciences Corporation. It's been around since the 1950s, Hewlett-Packard Enterprise Services. We're a large company. We have over 160,000 employees. We do business in over 70 countries around the planet. We do a lot in the banking space, in the banking industry. What I do and what I'm going to talk about today is the bank in a box, what that means, and really how we want to help banks define the future of what they do and how they do it. All right, before we talk about the future, let's just go back a little bit. Let's talk about and kind of level set on where we've been. For a long time, banking, transactional banking was the same, day in and day out. There's a guy, I don't know who he is, I don't know if he's around anymore, but I think he was a professor maybe at a university. Every year he would write about, kids that were born on this day 20 or 25 years ago have always grown up with certain technologies. So, my children have always grown up with the internet. They've always grown up with mobile technology. So back in the day, these banking systems that were put in place were the same. But in the 90s, the internet, we saw then the rise of mobile technology. The problem at banks today is simply that these systems that large banks run are very complicated. And the act of just making a change for how the core works, at its heart, it takes a long time. It's very expensive. So there's these run the bank budgets that are very large. That's what banks are spending a lot of money on. The large banks have a hard time moving, fast, constrained by the legacy core systems. We also have the same problem in small banks. There's a lot of legacy systems still around. There's a lot of constraints that prevent small banks from moving forward. So as we've heard today, as Nancy mentioned and as Ron mentioned, everything literally is changing. So banks can no longer think about if they're going to change, but how they're going to change. Yesterday, Gartner released an article, and they said that 80% of financial institutions today are going to be out of business or irrelevant by 2030. All right, so this is kind of interesting to talk about. We can talk about this later over some IPAs. But, the reality is that traditional banks, as we've heard, are being displaced. They've got to think about what the digital future means. And so neobanks and digital, it's the wave of the future. And as I mentioned, so large core banking systems put in these mainframes in the 1970s and 1980s. Traditional banks, small banks, want to do the same thing that the larger banks have budgets to do, which is start to do digital innovation and move the bank faster. Ron talked about neobanks and business models for, a bank can decide, do they want to be in the platform business? Do they want to be in the marketplace business? So we've got these different types of thoughts around, I can be an incumbent bank today, and I can start a digital brand. Again, it's really hard to move fast with the core systems that I have in place. Neobanks, now this word Don't get hung up on the word neobank itself as you read, articles. Over the last 2 years, sometimes neobanks refer to financial institution or people who want to enter the market that don't have a banking charter. Sometimes it's about financial institutions that do have a banking charter. We also have challenger banks. We read about them in the UK. But the point here is the whole industry is being redefined by faster, more nimble digital entrants that do much more innovation digitally than traditional banks can do. We talked about, again, BBVA and the money being put in. We mentioned Marcus earlier. So there's a lot of money, right now being put into digital innovation and changing the landscape for banking. It's also very interesting when we think about now, new systems being developed. We see a lot of use of the cloud. So AWS, Microsoft Azure, Google, IBM. We're seeing that there are companies that can do data center infrastructure better, and faster than a lot of banks can do. And for our large banking customers, we have conversations today about what the future looks like. Nobody's going to move off, if you're a large bank, off of your mainframe systems very fast and immediately. It's going to be a slow progression. But we're at that point in time where the trend has started. The cloud is here. And so we see these banks. Fedora, founded in 2009, just expanded into the UK. They've got a banking charter. Starling, Clearbank, first new clearing bank in the UK in 250 years. All of these outfits are now deploying cloud-based solutions. So it's no longer scary, really as scary as it was. It's still a little bit scary. There's still a lot of work to be done on the regulatory front. We do see the regulators, in the banks, everybody's starting to work together. That's good. There's a whole lot of work to continue and to evolve. But the cloud is here. It's getting traction. One of our Australian customers has said, and this is public, and you can Google this, they said, we're going to move all our core banking solutions into the cloud. Right? So we see it happening with smaller financial institutions. We see the desire being expressed on the point of larger banks. But the problem is, how does it happen? So we're seeing it happen in waves. We're seeing a start. This is an actual case that we're doing now with a bank. It's a small bank in Oklahoma. And they have big ideas. They have big thoughts. They really, really do want to do something different. They recognize that what they've been doing in the past is unsustainable, and it's not going to carry them forward. So we're working with them to move their infrastructure to the cloud. This is a 4-year process, so I'm not going to show all the transition slides, and don't worry about reading all the little boxes. These are, in essence, this is a omni-channel banking platform. User experience and what they've done for customer experience in the past, is recognizably bad. It's got to change. Omni-channel in banking, just the simple act of being able to start a process or an interaction with a bank in one channel and move on. If I start applying for a loan online and then I do find myself in the branch, right now, none of these systems talk to each other. So that's also got to change. So through partnerships, and I want to emphasize that, full stack from a lot of mid-core system providers in the past is really not going to work because everything, being locked in and one vendor thinking they can provide end-to-end full stack core banking up to the user experience and customer experience is not going to happen. So Axiom is a partner. We're putting the Axiom digital solution into Amazon Web Services. They also have a payment engine. They're going with SAP for finance. All the things, this is just the basic stuff you need to run a bank, right? It's the core ledger, the transaction processing system. It's digital omni-channel. Starting day one, though, that's still connected to their core back where they're running it, right? And it's still got some legacy channels. You can't change everything on the first day, but this is the start. 4 years from now, so again, I'm not going to show all the little transitional states in between, but the gray boxes on the last slide were things that aren't turned on day one. But at the end of this progression, what they have done is they've moved everything that runs the bank, the heart, the infrastructure of the bank, the life support system, the core ledgers, the digital omni-channel, everything is running in the cloud with a new core. And this will help them really start to do digital agility, the ability even just of working with FinTech. So a lot of folks here in the room today, working and thinking about, in financial technology and what banks need. It's very hard in reality to plug into a lot of the legacy infrastructure at banks. So this is what we want to do with Bank in a Box, what we're starting to help banks move much more aggressively and much more seamlessly and frictionlessly, into the future. So to kind of bring all this together, we talked about the cloud tipping point, Starling, and Fedora, banks that are already using the cloud. We talked about neobanks, doing things differently. And a lot of, I shouldn't say a lot, but some of these providers are starting with nothing more than a debit card and a current account, right? But it is so innovative, and the user experience is so much better than what banks provide today. It's working. We talked about legacy bank infrastructure. This over here, literally, as banks added online banking and mobile banking, everything was all hardwired. There's data everywhere. There's process everywhere. There's systems that don't talk to each other. That's got to get fixed. Generational expectations. My daughter is just turned 23, so I kind of use her as my test case. She does not want to talk to a person. If she can't do it on her phone, she doesn't want to do it at all. And when she was in high school at my traditional bank where I had a checking account, we opened a high school checking account for her, teaching her financial responsibility. So, these types of accounts, you're the parent and you can see the activity and what your kid is doing. Well, now she's out of the house and she's all self-sufficient. One of the first things she did, she bailed out, she opened her own account. And I'm saying, what are you doing? Why did you do that? Well, they had a much cooler debit card. Just, the way it looked. But the kind of the important backing point there, it's just about, because you banked at a bank, I look at my mom, has been at a bank literally for probably 40 years, the same bank doing the same thing, that's not going to continue. She doesn't need a bank. She needs banking services. So traditional banks are thinking about, how do they do that? How will they provide new, innovative digital banking services with a lot of constrained legacy architecture? So what we want to do is take all of that, the horsepower needed to run the bank, the systems, the ledgers, put it into a box, virtualize it, and make it lightweight and easy to move to. So it's really providing a full, integrated environment for either a traditional bank, large bank, and this is what we do. We do large. In our core banking business today, 6 out of the top 10 banks in North America by asset size run one or more components of our core. In Australia, 3 out of the top 4 banks run our core systems. So we do big. And again, big banks are having a hard time. They desire to start digital brands. We see that starting, but the ginormous core systems are not going to change fast. So delivering banking systems in the cloud, deposit lending products, APIs, which are table stakes. So there's been a lot of talk about APIs, and that's cool. The concept of APIs has been around since the 1970s with having an open way for systems to talk to each other and to communicate. When we say APIs today in this industry, we're really talking about business-oriented APIs, right? They're designed for business elegance. They're designed so it's easy for FinTech and for other entities that the bank wants to work with to consume and to use. But APIs, and being put on top of core systems will take you so far. It's a great first step to being open, but it's not going to really solve the problem of, how do we truly integrate FinTech today, what FinTech, will evolve to in the next year, the next 5 years, the next 10 years, what it means for the future of banking into core banking systems. So we do have to think of the core in a little bit different way. Monolithic cores used by banks, a lot of the banks today, large banks, small banks, they have to go. So we have to decompose the core. We have to think about the core as a set of capabilities. What is inside of the core system? Back in the day, there's all sorts of things that have been hardwired in. It's just the way I did it. I don't have a layers and places to put feature function. I didn't have FinTechs. I didn't have APIs. So all of this stuff was written into the core. We have to decompose that. We have to make it easy to understand. So again, APIs as that accessibility mechanism to talk to the core. We want to recognize customers, accounts, products, transactions, but we want to decompose what's in there today to a set of microservices and functions so that it's much easier to connect, for FinTech to connect to what's in the core banking system. Our bank in a box essentially is the core itself, as I just described, a new decomposed core. Channel providers, I don't have every single partner on here, but it's a world of partner ecosystems. We have an innovation marketplace that we've enabled, working with FinTechs, pre-integrating them, certifying them to work with the core banking system, plugging in to absolutely everything from just the processing of the core itself, the keeping of the ledger, to fraud, to multi-factor authentication, right? These are all the things today that are being put in and around the core system. We want to provide that out of the box, make it easy for third parties and other systems at the bank to integrate with that, and provide all of this through a monitored environment. We have a help desk. We can provide call center conversational AI, plugged into the systems of the bank, so I can start with chat online. Eventually, if I need to, I can transfer that to the call center. So all of this should come out of the box. I mentioned partnerships. The mentalities of the past, the thinking that I can build this, the bank can build it. The reality is banks cannot innovate fast enough. It just simply can't be done. The rate of change and what we've seen since the advent of the internet and how technologies connect, is grown exponentially. We're looking for FinTech partners, in these areas, micro app engagement, client onboarding, the act of when I want to subscribe or pay for or buy a bank product or service, that should be easy. So, things that Nancy was talking about, it shouldn't be a long process. It shouldn't take days. It shouldn't take weeks. AI, phenomenal work being done there around decisioning, around just having a conversation, chatbots. Microservices as a platform, back office integration, middle office integration, distributed systems of record, blockchain. Today, we don't see blockchain being used just to store, let's say, transactions for the deposit core today. But we're moving in that direction. I talked to a guy from Standard Bank down in South Africa last week. Internally, they're using blockchain just as an efficiency play inside the bank. They've got some derivative products. It's very complicated work. There's many groups at the bank that need access to this information. The tax people, the regulatory people, the risk people. So they've put the fundamental system that administers that onto a blockchain. And what it means now is these different groups in the bank can go directly to get the information they need without having to go through a bunch of esoteric processes and people to try to get to it. The point of providing a bank in a box, again, for an incumbent bank, for an enormous, large bank that has an enormous core system that can't move fast enough, is to allow them to, start a digital brand. For new players that, don't have a banking license yet, but, want to hold money in accounts, they want to go after and apply for a license. Middle-tier banks and smaller banks, again, that are just simply constrained because they use providers and they're using legacy ASP models. This is who the bank in a box is aimed at. It's allowing banks to focus on the business of banking. All right, and the last thought, really, and the cool part of all of this is around innovation. And I mentioned earlier, banks have a hard time innovating. There are large banks that do have innovation budgets, right? They have incubators. They act as venture capitalists. They look for FinTechs, but Then there's the process of hooking in. How do I integrate that into the large bank? Small banks, everybody can benefit from thinking about being, a startup themselves. If I'm a bank, what I'd like to do is I'd like to evaluate 200 FinTech partners or potential partners every year. I'd like to bake that down into 2, 3, 4 POCs with meaningful partners or potential partners, and I want to have that innovative mindset. And so our Bank in a Box is designed to really power all size financial institutions to be able to quickly and easily engage with FinTech and act as innovative startups. All right, thank you very much.
Thank you, Scott, for that great discussion. By the way, just after lunch, we have a very interesting keynote speaker who's